Our final presenter of the day and of Diggers is Liam Franklin, Head of Australian Operations at Allkem. Liam is a qualified engineer with over 20 years operational experience in world-class mining companies and has held senior management positions spanning maintenance, engineering and processing with BHP and Newcrest. He has a proud family history in mining and brewing, originating from a large goldfields family and growing up in Esperance. His grandfather, Reg, was the manager of the Hannan's Brewery in Kalgoorlie until its closure in 1982. Thanks, Liam.
Thank you, Courtney, and yeah, popular man, my grandfather, so yeah, thank you very much. Look, what a pleasure to be home in Kalgoorlie, and it certainly is a pleasure to be speaking at Diggers and Dealers, so thank you for having us. The closing act, what an honour, so yes, appreciate that, that's great. So look, what I'm going to talk a little bit about today is Allkem, but before I do, I'd like to hark back to day one, being the final speaker of Diggers, and what an excellent welcome to country we got from Lyndon. So I'd also like to acknowledge the Wongatha, the traditional owners of the land on which we meet, but also extend that to the Wogglkeep Southern Noongar people, who are the traditional owners in the Ravensthorpe mine, where we have a lithium mine, but also extend that to the Cree Nation, the Indigenous peoples in the James Bay area, where our upcoming spodumene project is, and also to the Indigenous peoples in the Puna, where we operate there. Really important, that relationship with Indigenous communities there, because we are talking multi-generational assets, so really important to us at Allkem. So the question I've been asked multiple times over the last few days is, well, who are Allkem? So we are a major global lithium chemicals producer. We came together with the integration of Galaxy and Orocobre, who are both ASX-listed companies 2 years ago. Galaxy Resources may have been more familiar to people because of the Ravensthorpe mine that had been recommissioned by Galaxy and operating since 2016. But Galaxy also had the Sal de Vida brine project in Argentina, up in the Andes, and also the James Bay deposit in Quebec. Orocobre had their flagship operation was the Olaroz or Salas de Jujuy brine facility in Argentina, which had been operating successfully for many years. So it's been a pretty exciting time for those two companies post the merger. The growth of the lithium industry has not gone unnoticed by anyone in this room, I'm sure, and Allkem now obviously a very important player in that regard at a value of almost $10 billion, and very pleased to be part of that journey. We also have a 75% ownership of our Naraha hydroxide facility in Japan. Both Olaroz and Naraha are joint venture partners in Toyota, their TTC division, and TTC are the operators in Naraha as well. Some recent highlights through the year and highlighted in our last quarterly statement. So record production for the year for the Olaroz brine facility, a fantastic milestone. Commissioning of the Olaroz Stage 2 brine facility, which was excellent. So the first brine coming out of that next upgrade of Stage 2 of Olaroz, which will get an additional 25,000 tonnes. Signing of the IFC Super Green loan for the Sal de Vida project was a really important milestone for us for de-risking in that Argentinian environment, but also to acknowledge our commitment to sustainability. The James Bay project's getting really close with its final provincial permitting that's coming along, and the production during the year at the Naraha hydroxide facility, which was really important. That continues ramp up. Closer to home for me, a really big year for the Mount Cattlin spodumene mine, where we hit record revenues of over $700 million. I couldn't resist just harking back. We had an announcement with our James Bay deposit that came out last week, and cross-sections are very popular during this conference. So we're in the midst of converting a lot of these incredibly good hits from our drilling program that went to the northwest of the known 40 million tonne resource into a new MRE that'll be issued in due course. But as you can see, some of these hits are sensational. We're very pleased with it, and we will, I guess, inform people as that resource gets closed out and as we can issue it publicly. Look, what I will say is that it's going to be really big and very good. So we're happy to see that. Look, I want to just sort of represent this slide that my CEO, Martin Perez de Soleil, presented in the World Mining Congress in Brisbane last month, because it's a really powerful slide of what we're about at Allkem. So clearly the climate is changing. Last month, July, was the hottest month on record, a truly terrifying statistic. Everyone's doing something about it, which is great. So there's a global transition to net zero, all right? So we can see that in the next column. We know that that's underpinning the drive in electric vehicle sales. So we can see that only a few years ago, new car sales only 5%, and only a couple of years ago, 14%. We know that in China, they're exceeding 30% of new car sales as electric vehicles. And we know that lithium is critical for that. So in 2022, 60% of the world's lithium went to those electric vehicle industry batteries. Then in May, we had another incredible announcement. Only 2 years after the merger between Orocobre and Galaxy, we decided to do it again. So the merger between Allkem and Livent is a really exciting opportunity for us, and that will not be completed until the shareholders vote it up later in the year and we can start operating as a new company. But I guess, who are Livent? They weren't well known, particularly in the Australian mining industry. They are a downstream specialist lithium chemicals company. These guys are old school with lithium. They've been working in lithium since the 1940s. This is a company that worked with Sony to develop some of the first lithium-ion batteries in their camcorders in the 90s. So deep lithium processing experience, and obviously a really good understanding of the market, specifically in North America. So they've got operations in the UK, North America, South America, and also in the Asia-Pacific region. So we're very excited by this complementary merger. Allkem, obviously, with a good track record of solid project delivery and operational performance as a resources company. Livent is a solid track record of operating large downstream processing facilities in multi-global operations. So it presents significant value for us and for our shareholders. There's three key reasons why this merger is really exciting for us. So scale is an obvious one. We become a really large player in the lithium space. We become a much bigger company, and also that eliminates certain barriers that are often presented with competitors being both as large as we are. Vertical integration. So Allkem announced earlier in its pathway that vertical integration and downstream processing was definitely part of our business plan and our strategy. So this is extremely complementary to that same strategy that we signed up for at Allkem. And the other one is accelerated growth. So Livent has a brine operation right next to our brine operation Sal de Vida on the same salar. It uses DLE, direct lithium extraction. They are very good at using that technique. We, however, have opted for ponds and steered away from DLE. So there is some really complementary opportunities there in terms of technology and extraction in the brine space. In terms of the hard rock, Livent are 50% owners of the Nemaska Mining Group, which includes the Whabouchi mine, which is only a few hundred kilometres away from our James Bay project, and also they're 50% of the Bécancour downstream conversion facility that is being built to support the Whabouchi mine. So a lot of synergies there that we're looking forward to getting around. And this is the other thing. Both our companies had significant growth pipelines and project portfolios. So if every existing lithium producer delivers on all their growth projects over the next 3 years, this is what it could look like, and we would be sitting there in number 3. And we're really, really excited about that opportunity. The obligatory lithium forecast slide for every lithium producer, I guess. Look, what's important about this slide, or I guess the view on EV sales, is we know that they're going up and we know they're changing regularly. So regularly we are forecasting EV sales going higher and higher. And EV sales are often used as the benchmark or the litmus test, I suppose. But the other thing that we need to consider is, and we certainly heard this at the World Mining Congress last month in Brisbane, every Tier 1 miner is decarbonising. Every Tier 1 miner has huge heavy haulage trucks. The most likely way that those vehicles are going to decarbonise is to go into lithium batteries. So EVs is definitely the hallmark number that people refer to, but there is still so much more to do in steady state storage as well as EVs. So we know that the lithium demand is going to continue to be with us for decades. We feel that we're uniquely experienced as a brine producer as well as a spodumene producer, as well as having a large growth portfolio. So the Mount Cattlin mine, it's a little bit closer to home. So it was built in 2009, arguably far ahead of its time. It was placed on care and maintenance during some tough times, and it was recommissioned by Galaxy in 2016. 2017, the first lithium concentrate was shipped, and it's been going ever since. So this is a really important thing for people to understand, is that the Mount Cattlin mine has been running successfully through the last 7 years, punching out that spodumene. And that's a credit to the workforce, the resilience of the workforce down there at the site, and the dedication that they've had. And it is actually really, really pleasing and rewarding to see that rewarded with the success that they're enjoying now with these lithium prices. You know, a fairly minor milestone compared to what Matt was talking about with green pushes, but look, our 1 millionth tonne of spodumene was shipped in April 2023, so that was a great milestone for the site. Sustainability is paramount for our entire organisation. In the Ravensthorpe area, our mine is only 2 kilometres to the north of town. It's really, really close. So we are really sensitive to the needs of the community and what we need to do to make sure that that relationship remains strong. They're very supportive of us, but we're also operating in their backyard. So we do have a community consultation group that regularly meets. It involves members of senior management having conversations with the people of Ravensthorpe and working towards amicable solutions. So it's really, really important for us, particularly with the future of Mount Cattlin as it currently stands. So recent highlights for the quarter. Look, for the year, we've really had some great health and safety improvements with a couple of programs that have driven some success there. We certainly were very happy with the final quarter at Mount Cattlin, where we saw a huge increase in our spodumene output, and therefore our spodumene production for the year coming definitely in line with our renewed guidance. Excellent to see over $500 million of revenue generated for the entire year, so we're certainly very happy with that. Recovery is a particular hallmark of the operation. We're getting, I would say, best-in-class recoveries right now at the DMS plant. And we recently reissued the reserve, which supports the life of Mount Cattlin for another 5 years. So that involves 2 cutbacks to the existing pit, which we refer to as 4.1 and 4.2. Just a reflection on some difficulties we actually had in the year and what we did to turn that around. So you can see the first two quarters of the year very disappointing for us, and FY23 was a tale of 2 halves for Mount Cattlin. Specifically, in Q2, we ran into some major difficulties when we realised we were getting into a part of the Stage 3 ore body and the ore just was not presenting as per the model. And what we realised is that we just hadn't done the drilling definition to be certain. So we had to redo a lot of grade control drilling, and we did that in far more drilling density. We reran the block model, and that was applied throughout the entire next Stage 3 of the ore body. So you can see the position we're in now, Q3, Q4, delivered a plan, potentially over-delivered a plan. And that's pretty much how it's going to be for some time to come. So we're very happy with the much greater definition we now have on the ore body, much greater certainty on what's in front of us, and that's how we're going to operate from this point forward. Our workforce is primarily contractors, so we've got a contractor mining model. We've recently awarded a contract for the next phase of growth for us to NRW, so our new partners. We're excited about that and seeing what that Tier 1 mining operator brings to our operation. We have almost 50% of our staff actually live locally in either Ravensthorpe or down at Hopetown, with the other remainder of the contractors and staff doing primarily fly in, fly out. We need to do some work with the people down there, and particularly now that we've got a guaranteed future. One of the big investments that the workforce is looking forward to is the establishment of a camp, which we've got approval to build from the board earlier in the year. That's even before we'd finished with completing the feasibility study. So confident they were that we needed that to reduce risk about people not being happy at work. So really, really exciting times for us. I guess a brief snapshot of the outlook over the next few years. So we've got some big investments that we're looking to make down at site. We need to renew our power station model needs to change. We're certainly looking at a renewable option there to go forward. The accommodation village I mentioned. The snapshot of actually like the ore bodies is looking at, as you can see down the bottom there, with stage 3 northwest, stage 4-1, stage 4-2, just 2 cutbacks. As we get into stage 4, the strip ratio is particularly unfavourable. Still makes money, which is good because of the favourable price, but we just want to look at some optionality there, and that's why that dashed line of an underground option is poking its head around. So we have engaged in doing a feasibility study. We expect that to be completed earlier in next year, and that's going to educate us and the board as to whether an underground option is a suitable go-forward plan for Catlin. We've completed a scoping study. So far it's looking pretty good. The ideal plan for us would be to get the diamond drilling program specifically to educate the consultants around the geotechnical issues that may present themselves. We're very comfortable with the country rock. There's a lot of tailwinds behind us for an underground option forward at Mount Catlin. So we're very excited about this and what it could mean for the increased longevity for Mount Catlin. The ore body dips down to the northwest of the existing pit, which you can see there is stage 3, and there's some really good opportunity obviously to then further drill and extend that resource and reserve once we are already underground. So a lot of opportunity there. There's also the non-tangible upside of going underground at Catlin, which from a community standpoint is really important as well. This mine's in agricultural land. Waste dumps are not necessarily what they want to see. So there's a lot of opportunity for us in the intangible space with going underground as well. I just wanted to close out on a slide about what else is happening. So the remit for myself and my team is not just Mount Catlin, even though that's obviously our flagship operation for the Australian presence. We've also managed to acquire some tenements just next to the Bald Hill mine, which we're really excited about. A highly prospective area that I'm sure everyone knows about. And we've already budgeted and looking to get stuck into an exploration program there this financial year. So we're really excited about what that might look like for the next phase of growth for our section of the world. Certainly, from a Mount Catlin perspective, we actually also have some capacity in the plant to potentially toll treat. So I hear a lot of emerging lithium producers really seeking that early cash flow with DSO, which is fine. However, what I would ask for most people that are in that scenario is just come and talk to us. And credit to the few that have, which is really, really good. This is an opportunity not just for Mount Catlin, but for someone coming online and maybe wanting to get a better return than they would get selling DSO over to an overseas facility. So really, really encourage that to be part of others when they think about that for their future prospects. And certainly in this area, we feel that we're uniquely positioned to do that. We're close to the port. Our plant operates extremely successfully. We've got a capable team. And we know that we'll get a good value for anyone who's in that position. The other thing is that we are increasing our interest in this area, even with the merged entity. It's been made very clear to us that we want to be operating in this jurisdiction. We want Mount Catlin to be operating into the next decade, and we want to be increasing our presence in the region. We want to be part of the West Australian lithium mining story because it is one of the world-class lithium mining areas. So we want to be part of it, and we want to basically make sure that we're continuing to operate here and be a presence. And that's pretty much where I'm happy to leave that there. So I guess the takeaway for us as Allkem is, we're really excited about the upcoming merger. We've got a massive growth portfolio, which is really, really great. However, closer to home, Mount Catlin's got a hell of a lot of legs in it yet. And we're also looking to expand our presence even further. Thank you very much.
Thank you, Liam.